So I thought yesterday's action on Bitcoin was fascinating. Remember the wedge pattern we've been discussing here? I'm going to zoom in on it. Yesterday during the day, we were above it, but once again, by the close, we were back below the breakout line. So again, I mean, really amazing how this has been working, right? We have these levels here, and we got above it yesterday. We pulled back by the end, so there's no breakout yet. We're back above the level today, basically back above 38,000. But ultimately, we need to see where it closes, and then I want to see whether it confirms. But right now, it continues to attack this. Now, the kicker is for crypto is this, right? This is a risk-on market. I mean, look at whether it was the GameStop chart I showed you earlier, or the Microsoft chart, or any of these other charts. The markets have been going crazy. They continue to rally up. It's euphoria, and that's the perfect recipe. If Bitcoin is going to break out, this is like the case in point opportunity for it to do it, because once fear comes back in, it may keep it from breaking out unless they get that spot ETF approval. All right, couple other charts we want to just quickly go over here. Let's take a quick look at the gold chart. Gold is pulling back a little bit today, basically back to the flat line. Just quickly going over this chart here, guys. Again, gold, we know we had that minor breakout right there. It popped 1-2 today. In the overnight, it was up here, getting very close to the all-time highs. But again, it is stalling out as the dollar is beginning to bounce just a little bit. So again, either way, I continue to be a fan of gold. I've told you guys now for quite a while that gold was doing exactly what it should be doing. To just draw my attention even more so, take a look at this chart on the GDX. GDX, I love this chart, and I've said that. So what do we have on this chart? We have the inverse head and shoulders, okay? And look at the beginnings here. We still haven't broken this out, but we're literally right into that line. This is an amazing chart, potentially one of my favorite charts for a big money move. If you're at inthemoneystocks.com in my verified investing alert service, you know we are long this. We're already up 8% on this trade, and I still think it's going higher, guys. Again, I think the miners are probably one of the last areas that haven't had a big move in this market over the last few years. If you look at the miners, the GDX, compared to almost any other sector, this sector has basically gone sideways to even lower. They are primed for a breakout. If inflation continues to moderate, we will be looking to cut rates next year. The markets, again, in this light volume post-holiday, GameStop is the cataclysmic power kind of player here that, again, and I can erase that trend line, is basically the risk-on signal. And look at the candle yesterday. All right, look at the things that went crazy a couple years ago that just went up and up and up. And when you see a candle like that, it starts to tell you there is froth in the market. Now, again, it doesn't mean, and this is important, it doesn't mean the markets can't go a little bit higher. What it does mean is that you have to be on alert. When there's too much complacency, things can go wrong. And when we talk about complacency, we have to bring up the volatility index. So here's the volatility index, guys. And again, if I zoom out on this, take a look at the chart here, right? So the chart on the volatility index, the VIX, very clearly shows us that we are down substantially here. And again, volatility has collapsed down to the low to mid 12s. Look at this drop, guys. Look at this drop off in volatility. Now, again, the way those of you that are kind of new to trading want to analyze volatility is basically that it tells you whether or not people are scared, and scared is when it's high, or if people are like, meh, this is the easiest market to invest in, I'm always going to make money, just go long, walk away, go on vacation, and I'll make money. That's what happens that's when the VIX gets this low, people start to feel that way. And the idea behind it is that when the VIX gets too low and there's too much complacency, it sets people up for disappointment, right? So you start to get in a situation where people are too complacent. They think nothing can go wrong. The Fed is just perfect. They're like, if the Fed just engineered this amazing soft or no landing, the economy's going to have this perfect scenario here. And that's when something can pop up that the market's not prepared for. And that can create an outsized sell-off in the market.
Crypto legends, welcome back to Crypto Street, where we've got a wild ride on the crypto roller coaster. I'm your guide, and today we're diving into the SEC's latest moves, Bitcoin's price explosions, and institutional investors placing bets. Buckle up, it's about to get exciting. Hold on tight. The SEC just threw a curveball by putting the decision on Franklin Templeton's Bitcoin ETF on hold. But here's the plot twist. They want your opinion. Yes, the SEC is crowdsourcing wisdom to shape the future of crypto in the financial arena. This move comes as Bitcoin is soaring past $38,000. Franklin Templeton, the crypto trailblazer, proposed a spot Bitcoin ETF aiming to shake up how we invest in digital gold. The SEC is playing detective, investigating potential market manipulation and fraud, especially concerning Franklin's partnership with Coinbase. They're on a mission to fortify the rules and protect us investors. Listen up, crypto street investors. Institutional investors are on a shopping spree, and the rumor mill is buzzing. They dropped a hopping $346 million into crypto exchange-traded products, ETPs, in just 1 week. Why? Because they're smelling potential Bitcoin ETF approval and they want a piece of the crypto pie. The Bitcoin ETF fever is real, the lion's share of that $346 million. A jaw-dropping $312 million, all flowing into Bitcoin-specific funds. This surge, combined with the rising crypto values, has pushed the total assets in crypto funds to a mind-blowing $45 billion. We're talking serious cash here. But wait, there's more drama. The SEC has set a 21-day window for public comments on both Franklin and Hashtag's Bitcoin AFEF proposals. It's a regulatory roller coaster, and the market's loving it. Meanwhile, Bitcoin's playing its own game, skyrocketing past $38,000. Why? Rumors of a Federal Reserve policy shift and potential interest rate cuts are stirring the pot. And there you have it, crypto trailblazers. The SEC is shaking the crypto world, institutional investors are making it rain, and Bitcoin's dancing to its own beat. Drop your thoughts below. Do you think the SEC will greenlight the Bitcoin ETF? Now let's continue our enlightening discussion with Gareth Soloway.
Now is the natural gas chart. And this is the really important point, guys, right? So natural gas showcases that everything is probabilities. So in terms of that, what do I mean? Well, it shows you that really probabilities had us slated for a bounce down in this area, right? So down in this area, right in here, we should have bounced. Now, we are getting a bounce today, just a little bit, but again, it just shows you that nothing is infallible. I am not infallible. I am not going to always make great, amazing calls, which is why diversification is the #1 thing you must always remember. Remember, out of every 10 trade alerts that I do or trades I take, probably 2 to 3 are going to be wrong. That's just the nature of probabilities, right? And the nature of chart analysis. And so the key is to make sure as a trader, I have to take enough trades where the overall averages play out and I make money just like a casino does. Remember, I always use this analogy. I want to be the casino, the investor casino. I want to take a lot of trades, like a lot of gamblers coming into my casino, and overall, the gamblers coming into my casino, some of them will make money, but a majority won't. And that is the game that you're playing as an investor or as a trader. So here, now the one thing I will show you on this is that we technically did yesterday hit another level of support, but just like always, there is no guarantees that it's going to hold. The level of support's a pretty cool one here. If we just bring this through here, I'll show it to you real quick. Let me pop that back. So essentially what we see here is this level, right? This level, we go through this area, right through here, and right through these lows, and it shows you that it did pop down to that low. Now, again, is it going to hold? At some points, one of these levels is going to cause a big bounce in natural gas. We'll have to see if this one is it. Now, the trickier thing is we did not confirm, and this is where we get into a little bit more complex stuff that I teach in the Winning Trader series, but we did not confirm below this level. So yes, we broke down, but it's not a confirmed breakdown yet. So this is where the confirmation signal really becomes first and foremost, where you have to look and see, okay, do we confirm? As of now, we wouldn't if we continue to bounce. We would actually have to close below this line to confirm this breakdown right here. All right, a couple other charts I just want to show you guys real quick. But again, not much left to talk about here. Just looking at oil here, guys. Real quick update on oil. Oil is inching up just a little bit. We're still unsure about what this OPEC plus meeting is going to do. But I will say this, is you have the beginnings of a slightly bullish pattern on oil. What do I mean by that? Well, number one, you have this little pattern like this. It's not the greatest of patterns, but it is what I would refer to as an inverse mini head and shoulders pattern. So essentially what we're looking at here is we have a trend line that's slightly downsloping. If price can get above, let's say 78 on spot crude, you actually could, and I repeat, you could end up retracing to the scene of the crime here, which is this trend line. And again, my line's not very accurate here, but it would be around $86, right around 86. So there is a possibility we could get that move up there on the chart of crude, spot crude oil.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.